Light them
Then,
up.
what's that?
Light them up.
All right. I'll call this meeting of the Finance Committee to order. We have a roll call, please.
Carol Whitley. Here. Gary Hertzberg. Paul Cardarella.
Here.
Chris Zelman.
Here.
Jim Elfro.
Here. Here.
See, I did it wrong. Joe Zitzelsberger,
Here.
Al Dasso.
Here.
All right. First thing on the agenda is the consent agenda. Do we have any motions or?
Motion to approve the consent agenda.
You got a motion by Chris?
Question. Does that include the minutes from the two meetings?
It's actually only the minutes.
Oh, okay.
Yep.
I did have a question on the August 15th minutes.
Would you like that pulled?
So
So we can discuss?
Well, let me just summarize. It was just a follow-up question from Al, actually, in regards to sick leave balances. On page 5, it said, yes, whether the sick leave conversion liability should be shown in the senior center and village center funds for those employees. And the finance director responded that under governmental accounting and liability, this liability does not show in the balance sheet, but as a assigned fund balance. And she was going to investigate if the current method of showing all employees as assigned fund balance and general fund is appropriate. So I was just wondering if you had done that.
We're gonna, when we get to the agenda item about the carry forwards where we talk about the sick leave balance, I'll go over that
Okay.
answer to that.
Okay. And then on the October 17th meeting, I'll ask another question about budget policies. If the unassigned fund balance is greater than the budget policy. So apparently there's some follow-up there, and I don't know if that's going to be discussed later too, or.
That is gonna be at a future finance committee meeting. We
Okay,
don't have that for tonight.
Okay.
All
That's my
right.
only comment.
So we have a motion by Chris. Do we have a second?
I'll second it.
And a second by Sarah. Okay, I'll call the question. All in favor, say aye.
Aye.
Opposed? And that motion carries. We've got a section for public comment. Not seeing any public in in attendance, we'll move on, I guess. First item of business, approve the resolution designating public depositories and authorizing withdrawal of Village of Waunakee deposits.
So the state statutes require that we every year approve our public depositories. The way we have done it historically in the village is we approve every institution that has a physical branch in Waunakee, just in case we would need to bank there, even if we don't currently have an account there, just to be safe. And then we also approve the local government investment pool, and then the brokers that we use and that the Waunakee Utilities uses. So it's again, it's all banks and financial institutions within Waunakee's borders.
Okay, any discussion or questions?
I'll make a motion to approve.
Okay, Sarah with the motion. Do we have a
I'll
second? And Paul with the second. Okay, all in favor, say aye.
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 Opposed?
I'll need to abstain as I work for one of the banks listed.
Thank you. All right, and second order of business, discuss and take action on resolution approving the carry forward of unexpended 2022 appropriations and assignment of fund balance.
Okay, so many of you are new members to finance and you haven't been through this before, but this is a process that we do every year. We have the departments look at what they spent in the previous year and see if there's any items that they just didn't have time to get to, or they didn't spend it for some reason and they need to carry it over into the next year's budget. And then there's some of them that are what I consider ongoing carry forwards, things that we budget. We try and budget, for example, the election budget consistently over a 4-year period, so that when we're hit with a presidential election, we have money kind of saved up for the year where we have 4 elections. So some of those are on this list as well. And a number of them, as I look through today, are things where we maybe received a donation or a grant, but the action, what it was donated for isn't going to happen until 2023. So we carry those types of things over. But I'm happy to go through them in more detail, or if people have questions on that first part. Again, it's the general fund, the senior center, the village center, and then there was a couple equipment replacement things that needed to be carried forward.
Okay, let's just go around. We'll start with you, Al. Anything?
Just one question initially, and that is, you give us the financial information at the very end. Does this already factor into that? I mean, the budget amounts adjusted for what you're proposing here? Or is this a change to the information you gave us at the end of the year?
You mean at the end of the meeting?
Yeah, at the end of the, give us all the information.
Yeah.
Very back is the financials.
So those are draft because our audit is still ongoing. And so in that case, the carry forwards don't really affect the reports that I gave you there. The budget amendments are not in those reports because they haven't been approved yet. So, I mean, this is just a first pass of the December numbers that you'll see. Then when the audit is near completion, the auditors will come and do a presentation, and they'll have they're going to present draft reports this year so that we can discuss in case there was any comments or changes, and then they'll issue the reports after that. So that'll take place in June. But with these carry forwards, what I did do is I looked to see where our fund balance would be in accordance with our fund balance policy, if these are approved as is. And so our policy is to keep between 20 and 25% in a unassigned fund balance related to the expenditures and the 2023 budget. And so we would, even after all these carryovers, we would be at 28%. So still above our policy a little bit.
So starting on page, and I appreciate that. So
Yep.
starting on page, I think it's 204. I'm not sure. 16, page 16 is you're asking eventually about to transfer adjusting budgets, and there we're dealing just with the budgets. Are those what you're asking on this resolution impacting that at all?
They do not. They're kind of two separate things. So this is setting aside money in a assigned fund balance, whereas the budget amendments are moving things around within 2022. The assignments are going to the 2023 budget. So they're
Thank you.
similar but different.
All right, Jim, any questions?
Yeah, there's two transfers for assignments. Looks like they're ongoing. There's a joint venture stabilization,
Oh, yeah. I'll turn.
and that's just a good description of it's $200,000. Now, is that an additional 200,000, or is that just a continuation of the 200,000?
That would be a continuation. So that this is, I think, the third year that this has been in. So it's just holding the 200,000 that's been in there because we didn't have to use any of it in the past budget cycle.
And you want to keep it at 200,000. You didn't want to raise it.
I mean, it's just kind of like a
Placeholder.
right. It's more of first something very unexpected that would come from any of our joint ventures, fire, EMS, or the refuse district. We don't anticipate that happening too often. It happened a few years ago. They needed some air packs and we had to come up with the money kind of short notice. So this is just kind of setting that aside.
The other transfer was the accumulated sick leave balances, and you've got a really nice schedule there.
Yeah, let's talk about that one. Or what, did you have a specific question or I
Was
didn't?
this part of the resolution, right? That we're.
It is, yep.
Okay.
I was kind of still working on the top part, but let's go through the sick leave conversion
Okay.
calculation too. So on page 14, so every year we do a look at employees that qualify to convert their sick leave upon retirement, what their balances are, what their current rate of pay is, and we calculate approximately how much we would need to fund that liability when everybody retires. And so that's what this schedule is doing. And the estimated payments are basically, kind of looking at when we would project people to retire. so far people haven't retired at as quick of rate. You know, when they can retire, people usually stay here a little bit longer than what the Wisconsin retirement system age is. But this is if they would retire at those points.
So do you use a specific age range then for that? Is that what your projections are based off of?
So, I mean, I look at their birth date,
Yeah.
yeah,
that's
and
what I
compare
meant.
it to those ages
Gotcha.
to kind of project it out on when we would expect. And so since it only applies to those hired prior to May 16th, 2013, it tends to drop off, except the police union employees also get that benefit. So that's why we see it stretching way out to 2050, is because there's some young officers that don't have very much sick leave accumulated at this point, but they are also eligible for the benefit. But the bulk of people are in those more current years, their near-term years, for those people that were hired prior to 2013. And so then to Al's question at whichever meeting that was, so I did look into that. And so the general fund is funding everybody's sick leave conversion, no matter what fund they're in. So it is proper to show the assigned fund balance in the general fund. And then as people retire, we push that money over to pay for those retirements into those funds. So Village Center and Senior Center, you know, they're not a self-supporting fund. They get tax levy money and things like that. And this was earmarked to be paid out of the general fund.
So just stepping back a little bit, Renee, if I'm understanding is this is a reserve on the fund balance. And after this is taken out of the fund balance, the 28% that you referenced previously is what's left of the fund balance. So if this were overstated, then our fund balance would be overstated as well.
Our unassigned would be a little bit higher percentage.
Right. Because I'm not an actuary, and this is discussions we had when we set this up many years ago about the present values, about the life work expectancies and all that kind of stuff that comes into play. This is just raw dollars, gross dollars you're putting in here based on the best information you have.
Right. It's definitely an estimate and it's not actuarially done or anything like that.
Right.
So right there could be fluctuations from what when everybody actually retires.
Right.
That's why we look at it every year and try and get a better estimate each year.
And these are the costs that you actually pay to cover retired employees' health insurance.
Well, so the way we do it now is they'll convert their sick leave and then we place the money in an HRA account. And so then they don't need to stay on our insurance. They can hold that money in the HRA till they need it, or they can pay premiums. You know, obviously it has to be on costs that are HRA eligible, but we don't pay the premiums anymore like we used to a number of years ago. We switched to an HRA model.
Okay. If a person retires and then you put this money away, then they pass away, do their heirs, are they entitled to that money in that HRA, or does that come back to the village?
So that has happened once, and the village did pay it to the surviving spouse. That is something in the handbook that it was not written into the handbook, but as we're doing the handbook review, that was a suggestion that I said we should get in there exactly what happens. But we had just one case, and that's what we did with it. But it was not a written policy at the time.
Okay.
So the HSA does pass to the spouse. So you're telling me that on the day they retire and the conversion's made, you say here you're entitled to X dollars. On that day, you transfer that X dollars to an HSA?
Sorry, I should back up. So we do not give them the full balance upon retirement. There's a formula where they essentially get the equivalent of a family health and dental each year until it's used up. So that's where where the difference came in with the person that passed away. So she did not have her full balance in her HRA. Yes, her HRA would go as designated, but we still had a conversion balance that had not been turned over to the HRA. Because we only give, it's about 21,000 a year until their bank is used up. It's a calculation that we have to do every year.
And Medicare's factored in that calculation,
Um,
Medicare. Hitting Medicare age, now I know it's supplement versus the Medicare premium I gotta pay.
Yeah, so the conversion is the conversion. So that if they retire and they have 1,000 hours, we take that times their rate, that's their conversion amount. It doesn't matter
Gotcha.
their age. And then some people retire with less than the annual maximum of, say, 21,000. And then they get theirs all up right away. But people that have very large balances, it may take 3 years to get them paid over to their HRA.
Wow.
Something else I think that we're looking in the handbook, should they get that all upon retirement? Or, at first we didn't know that we'd have enough balance to pay everybody out immediately. So that's why we kind of did the annual calculation. So for the person that passed away, it was just what we were still holding that we hadn't turned over to the HRA. But yeah, those have beneficiary aspects to them.
Anything further? Okay, Chris,
Questions?
Paul,
No questions.
and Sarah.
No, you answered everything that I was thinking, so.
I'll add my one little clarification here. You were talking about the handbook updates or whatever. Is that the same handbook that is on the board agenda tonight, or is that different?
Tonight's the compensation strategy.
Okay,
The handbook is another document. I would expect the board will be seeing it mid-year.
okay.
Review.
Yeah, I didn't see that when I reviewed it and I thought, geez, did I miss it?
No, it's
Good deal.
2 parts of the employee.
Okay.
Pieces.
In that case, we'll look for a motion.
I move to approve.
Okay, we've got a motion by Jim
I'll second.
and a second by Al. Any further discussion? Okay, all in favor, say aye.
Aye.
Opposed? And that motion carries. And on to item number 3, discuss and take action on a resolution approving fund transfers and budget amendments.
Okay, so the format of this is maybe a little bit confusing, but I just wanted to clarify. So the essentially what we're trying to do here is we look at our expenditures compared to budget, and we look to see how we can amend those to be at or under budget. And so that happens in a couple different ways. Either we've overexpended the budget because we had an offsetting revenue to help with that, maybe donations or building permits to cover the extra costs that were involved in inspections. Or in some cases, one expenditure is under budget and it helps to cover the overage in another area. The best example of that is Public Works. We have the same pool of employees, but they might be doing streets or snow or parks. So if it was a lighter snow year in 2022, so some of that time then they spent in streets, and we don't know that. So we kind of shift the money from one area to another to help cover those overages. So the revenue sections that you see, like starting on page 16, so those are not debits. If people who think in terms of accounting, those are positive numbers because they're increase in fund balance, and the expenditures are negative numbers because they're decreasing fund balance. That does not mean that those are credit balances for those strict accountants in the room. So that's the confusing part of this. But so, again, I show the original budget, how much we need to adjust it, and then the adjusted budget, just for the areas that, again, had overages in their expenditures. And so everybody knows, departments, departmental budgets are at the department level as a whole. So it's not line by line. They don't have to meet each line of their budget, as long as in total they're under budget. That's adequate. So again, I can go through these, or first, if people had specific questions as they had looked at it. But for the most part, there are revenues to cover expenditures that were over, or again, a little bit of reshuffling of some of the expenditure departmental areas. A few cases where we maybe had to use miscellaneous revenue to cover something that was unexpected.
Okay. Let's cover any questions. We'll start at the other end today, or this, for this one. Sarah, anything?
No, I mean, it looks like a lot of the adjustments were based on like the streets or like parks, but they kind of balance each other out a little bit. What is the inspections services? That's
So we have, we outsource our inspections. So that's building inspection.
okay.
So if there's like a new build or a remodel,
Gotcha.
they're going out to inspect it.
Mhm.
So that's where the permit revenue up above is helping to cover that, because
Okay.
the people doing a new home or a remodel or whatever, they have to pay the permit fees. That is what pays for the inspections. So those kind of go hand in hand there.
Okay.
And maybe I should just explain the developer rebills, because that's a big number, and then the developer fees. That's where you see a $500,000 adjustment. So we don't put any budget into those two line items. So what that is if a developer comes to us and they want to do a project or a new neighborhood or whatever, we have them sign a developer agreement, and they are required to pay our legal costs associated with that work, our engineering, if there is. So we pay the bills to, say, our attorney or Strand or who's ever doing the work, and the developer is required to pay us back. So those generally offset. We don't know exactly how much activity there will be for developers in a year, but we're going to get reimbursed for all of that money. So, and the more activity we have in a year, the more revenue we get to offset it. So, that's why those exactly offset, and they're pretty big numbers.
Yeah. No, I don't think I have any questions.
Okay. Paul, anything?
Yeah, so just to confirm here is that you have the original budget here for general fund. It was estimated around 1.2 million, and even with adjustments, you're over budget by 128,000 estimated. So then the grand total about 1.3 with adjusted budget, is that correct?
I got a little bit lost.
So the general fund total. So it looks like even original budget with the revenues, you're at
Yep, I
approximately
see the
1.2.
numbers. Let me think about why that wouldn't be closer. Well, I think it's better to look at the adjustment, the net amount of the adjustment column, because some of those revenues or expenditures, I mean, this is not the total general fund. These are
Got
only
it,
the
got it.
affected
Okay.
lines. So in looking at the adjustment amount, we're making a net adjustment of about 128,000.
Okay.
Some of the vast majority of that is paying for the retirements in the village center that we didn't budget for. And so that was coming out of the fund balance that we had set aside. And then also, the board had approved the bonuses for staff. And that was paid for out of fund balance. So that's why there's more expenditures
Got
being
it.
adjusted than revenues, because we were planning to use some fund balance to cover some of those costs.
Thank you. And then a follow-up question regarding debt service. I noticed
yeah.
there's additional payments towards principal. Was that,
Yeah, that's a great question. So in 2021, the board approved a transfer of just about that 860,000 to pay off the state trust fund loan for the library.
okay,
So that was a debt, rather than trying to refinance it or do something more. State trust fund loan had a little bit higher interest,
Mhm.
and we had enough fund balance at the time in 2021. So we transferred the money back in 2021, but we didn't pay off the debt till the beginning of 2022. So that was, again, we were using fund balance because we had already moved the money over. So we paid off that loan
okay, thank you.
early.
All right, Chris?
Mine's just, TID two is closing in 2023, so you won't have that expenditure transfer out moving. That transfer out is over to downtown TID, right?
Correct. Yep. So that was just the last little bit in 2022.
Yep.
TID two won't have any activity for 2023.
That's it. Thank you.
All right, Jim?
I had a couple of questions, but Paul asked them already, so.
Excellent.
So I don't have any other ones.
Great.
One clarification
Oh.
on Chris's question. You said, Chris, did you say that it was transferred out to the other district? I think it was transferred for the affordable housing program.
Well, there
To-
is
or-
3,000 that was transferred to, well, no, that's not. It was split. So the affordable housing only got the true increment. That was for the extension for the affordable housing. There was a little residual money that had to go to TID 5 still in 2022.
All right, just want to make sure.
Yeah.
Thanks.
Actually, I did have one more question. I'm sorry.
Okay.
Looking at that schedule on page 25, it looks like, looking at the fund balances, then looking at the 2022 increment, it looks like a lot of them will be paid off very soon. But then when I look on the projected closure dates, they seem further out into the future than you would expect.
So that is because there are other costs that are still like paying off debt and things. So the fund balance deficit is just at the point in time, which is December 31st.
Oh.
But there's some of these still have costs out into the future. And that's why the projected closure isn't like immediate.
There's more debt. on
Yeah,
some of
there's,
these.
right, because they're paying debt. So they don't have, their fund balance is not enough to pay off the entire debt yet. Or whatever costs might be out there, maybe developer payments or whatever. So it in some cases, it'll take several more years
Oh, okay.
to pay that off.
So if you look, Jim, the statutory closure versus projected closure, most of them are closing significantly earlier
Oh, sure.
than when they would normally.
Right.
And that's, we're looking at, in 2025, half of our TIDs are gonna be done.
Right.
So that's real close, and the board, this committee will be deciding whether or not funds would be used towards our affordable housing initiative.
And that's a
as well.
TID by TID basis, whether or not you want to extend it for
Correct.
1 year.
Correct.
Okay.
Yep.
Correct.
All
All
right,
right.
that's-
And Al?
Yeah, so you, excuse me, you already answered one of the questions, and that's on the debt, which initially was concerned about, but that's a 2021 motion, so that's really not relevant, I don't think, for us at this sitting.
Right, but yeah, I should have pointed out that one looks like way over budget, but
Right.
we had planned for that.
Yeah, I understand now. But the other question I have is, within the general fund, there are a number of adjustments you're making that are substantial in relation to the initial, the original budget. And maybe you can speak to the streets full-time, parks full-time. And that might get into snow and ice. it seems to me like those are some relative to the accounts, or the original budget. Those are some substantial adjustments to the original budget. Maybe you can help me understand what those are for.
Yeah, so I think I mentioned that the public works employees work across multiple departments. So if they don't need to plow if it's a lighter winter, then they're doing more tree trimming, which is a parks cost, or they're doing more street work, street cleanup. So so that's almost, you have to look at them in total, what that pool of employees, but in terms of the relative to the original budget, for ease of administration, as I said, they only need to be under budget for total of the whole streets department. So I generally pick the full-time employee line for them to make the adjustments up or down to cover that entire department. Because if I did it on every line, this thing would be, 10 times as long. So I do my budget adjustment. I try and pick the largest overage and I put it all there, if that makes sense.
Yeah, and that's what I expected your answer to be. When I take the 122,000 of parks and I take the snow ice at 107, that's $230,000 versus the 298, and you answered the difference could be the bonuses or whatever else.
Well, the difference actually to make up for the public works accounts is the actual salt and sand.
Yeah.
I miss the salt and sand.
So I have a nice color coded one I should have given you guys on which one's offset, because I don't always remember, but the salt and sand was another line that I did to help public works, because they did not need all that.
Yeah, and I can appreciate that. And it's just that when I see the size of the adjustment, that's what was troublesome. But then I started figuring, okay, you probably, especially based on your later discussion in the agenda, plus what you just said, you need to add a bunch of numbers together to get to the net number. So I understand that.
True.
Okay. I think everything else has been covered from my perspective, so we'll look for a motion.
I'll make the motion to recommend to the village board to approve the resolution approving fund transfers and budget amendments.
All right, motion by Chris. We have a
Second it.
And a second by Sarah. Any further discussion? Okay, all in favor, say aye.
Aye.
Opposed? And that motion carries as well. And we're on to the last item, discuss the fourth quarter financial report.
Okay, so as I mentioned before, our audit is not complete. I'm not expecting a lot of adjustments to these numbers. Or I don't think any, but they're still working through the review process and finishing their final work. So, and as I mentioned also, the budget columns are before the budget amendments that we just talked about because they haven't been approved and they haven't been entered into our system yet. But I think, so in some cases, some of the things we just talked about, the variance won't be as big. Obviously the actuals are the actuals that I expect to be there. So I tried to be pretty detailed on here because I didn't know how much time we might have. The one that I really wanted to point out on this first general fund page, on page 21, was the miscellaneous revenue. And that's, you'll see a negative number for the revenue. And of course, a very large variance. And so that is, we are required to record our investments at market value at the end of the year. And there was a very large unrealized loss on our investments due to the market fluctuations and where those were at. So that, again, it's unrealized. We have always held our investments to maturity. So there shouldn't be, any actual realized loss. It's just that we took a very large market hit in 2022. So I wanted to point that one out because that, you know, on the financial statements and everything, that'll show us a negative revenue.
So I assume that these investments are bonds,
They are typically,
not marketable securities like stocks.
nope, the governments are not allowed to invest in that. So we have some government bonds, we have corporate bonds. Everything has to be AA or better rated. I mean, the Wisconsin statutes are very strict on that. So, but there's still, you know, we have a fairly large portfolio. So if all of them, you know, market adjusted 20,000, it does add up.
I don't know the scope of this committee entirely, but is there an investment committee that, and who makes the decisions as to what to buy and what not to buy? I see we got Stiefel as a registered depository. We have RBC as a registered depository, which are brokerage firms for the most part. So assuming those are the folks you're using for the bonds. But who's the person that decides what to buy and what to sell?
Currently that is me for the village, and we now use Stiefel. We used to have a company called Vining Sparks and they merged in with Stiefel. The other one, RBC, that's what the utilities, they use them for theirs. So our contact person at Stiefel, he will, if we have one maturing, because we don't change these very often. We usually buy them for 5 years. I kind of have followed the same pattern as the previous finance director. Our contact will give recommendations and I will look through them, make sure they meet our qualifications and make those decisions. But you know, there's probably in any given year, maybe 2 or 3 that will mature.
Right.
And we'll repurchase, but currently, yes, that is with me.
Right. Thank you.
Anybody have any other specific questions on the general fund? Like I said, I tried to lay it all out pretty closely at the bottom there. And some of the reasons are things that we just talked about in the budget amendment section. Otherwise, moving on to the senior center, you know, not a lot of fluctuations there. I would say they're getting more back to pre-pandemic levels at the senior center. Took them a little bit longer than the village center to get back to pre-pandemic levels. But they had a pretty strong year at the senior center. Expenditures just very, very close to budget. Questions on the senior center? All right. Village center, they've pretty much fully rebounded from pre-pandemic to pre-pandemic levels. And even some of their programs have increased, such as Learn to Skate. That's a really popular one right now. Let's see, there's a policy on how much fund balance that they can retain. And so after we did that calculation, they actually were able to make a transfer to the debt service fund of 52,600 or just a little bit above that, to help pay down, because there still is some outstanding debt after various refinancings on their building. So that's part of the policy, is that they then use any excess money that they have to pay down that debt. So that hasn't happened the past couple of years because they were again trying to get caught up from, you know, being closed for a long time and then taking a while to get their programs back. But they had a very strong year and were able to transfer that back. All right. Page 24 just kind of a breakdown of our cash and investments. So at December 31st, that's probably the highest level that our balances reach because of all the tax collections. And that is before we have to pay the school district, the county, the tech college. So we have the most money on hand right at the end of the year and throughout January, as well as we continue to collect taxes. But we do, you know, and you'll see checking has the very most of the money. You know, we do have full protection over that money with FDIC insurance. There's a state guarantee fund. We have a federal home loan bank letter of credit that secures some of the money. And then for anything over and above that, then we also have a collateral agreement to cover all of that. So we feel we are fully protected even with those large balances. You know, primarily that's one community bank, but we also have very large year-end balances at State Bank, now Lake Ridge Bank. It'll take me some getting used to, but so we have the similar letter of credit there for anything over FDIC coverage. Any questions on that? And then the last one we kind of touched on, but the fund balance for all the TIFs, again, that is as of December 31st. Some of them, you know, can't incur, like TID 3 can't incur any more costs. So that's the one that we will be closing here in probably and making some decisions in about a month or so. It needs to close by June 5th if it's going to close. And then some of the other ones, you know, still have a number of years of either developer payments or debt payments. And that's why the projected closure is still out into the future for the most part. TID 4 is another one that's getting really close. After we get the equalized value this August, we'll see if there are enough funds to potentially close that one as well.
Renee used the word "if" in referencing TID 3 and closing in 2023. That relates to whether the board has the option to choose to extend it a year for contribution to an affordable housing fund. So that's the option that we're going to be discussing with the board in the coming months to decide what we will or won't do, what the board will or won't do.
Yeah, and that is on, a discussion of that is on the CDA agenda for next week to have them have a first discussion on what they might recommend to the board, whether to just outright close it or perhaps extend it.
Renee, if you don't extend it, you close it.
Hey, Gary, one note, just make sure your button is,
We are recording,
Yep.
yes.
Do those funds then go to the general fund if you close it? Versus extending it for a year? Where do those funds go?
So if there's any residual amount and you haven't done the affordable extension, then that gets refunded to all the jurisdictions. So, so it would be a prorated share. The village would get some, the school district would get their piece of the tax pie, the MATC and the Dane County. So that's just if at the very end there's any left over. Now we still need some, there's the asterisk that said we will receive the final increment in 2024. We still need some of the increment to pay off the final costs of that TID. So even if whether we extend it or have residual balance, it won't be the full amount of the increment. But we don't keep all that money. We would only keep our prorated share.
Any other questions?
I just have a, I guess, kind of a question, kind of a statement, and that is going back to the general fund information on page 21. When the board originally adopted the 2022 budget, the expectation was, from what I can tell, that the fund balance was going to be used, $800,000 of the fund balance was going to be used in operations for the general fund. And in reality, only about 300,000 was used. So for whatever reason, there was $500,000 more in the general fund's operations than expected.
Can I clarify that just
Yes,
slightly?
please do. And that's what I'm asking
So,
the question.
in the original general fund budget, we budgeted, a use of 410,000. So to get from there to the 800,000 that you're showing in the budget column, that takes into account some of the carryovers that went from 2021 to 2022. So,
This is getting complex.
it does. So some of that carryover is the ongoing things. So we definitely did a lot better than what we had budgeted, but not as much as what the actual adopted budget was. So 410,000 usage versus 337,000. But then the carryovers also add to the fund balance. And we didn't use all those carryovers because some of them are ongoing for, say, elections or assessment, that type of thing.
Right.
So, but you are correct that that it does all go to the bottom, the unassigned, if it hasn't been assigned.
So in again, forgive me if I'm wrong, or you can correct me, but the village has a policy that they want the fund balance between 25 and 30%.
20 and 25.
2025, so we're above 3% right now. What's the plan to use up that 3%? I mean, how do we get it to within the policy? And it perhaps gets to a bigger issue of, what are we going to do with the money and what happens with it?
And yes, and you had brought that up at a previous meeting. We just have not gotten it on a finance agenda yet to see if we do need to have a different type of policy. Because right now there's not a policy for the usage, there's just a policy for the balance.
Okay.
But with, this is a number of members' last meeting. And so it seemed fitting to wait until we had the new finance committee in place and the new board in place.
And I'll defer my discussion then.
But yes, I have not forgotten about your comment prior about the usage, because we don't currently have usually if somebody has a need, or we perceive a need, we'll go to the board and ask to use fund balance for something like we did for the bonuses. But there's not right now a written policy on usage.
Right.
So
Thank you.
something for maybe the next finance committee meeting.
All right, any further questions or discussion? All right, there's no action needed on this, so just looking for a final motion then.
Motion to adjourn? Second.
All right. motion by Chris.
Before you vote, Joe, I do want to add, meetings like this always remind me how glad I am that Renee is on our team. But I want to add, we're actually in the process of beginning interviews for an assistant finance director position. The board approved that with the last budget. We are interviewing candidates with CPAs and experience in municipal audit or municipal finance work. Hopefully the next finance committee will bring him or her with and introduce them to you.
Excellent. All right, so we've got a motion by Chris and a second by Jim to adjourn. All in favor, say aye. Opposed? And we are adjourned.